One of the most expensive mistakes you can make after 50 isn't picking the wrong stock, it's hiring the wrong financial advisor. So, today, I'm going to give you 4 red flags to watch for and a simple framework to find someone you can actually trust. Hi, I'm Scott Mullet, and welcome to the Wise Lane. Money, mindset, modern living. Money, mindset, modern living for the over 50 crowd. Yeah, that's us. Hey, you younger peeps, you are very welcome too. Consider this is a sneak peek into what's coming in your life. In our Wise Lane Investing Over 50 series, we've talked about investing mistakes to avoid, types of risk, portfolio structure, taxes, and staying calm during market swings and volatility. So now let's talk about something even more personal. Who you trust to help guide all of those decisions we just talked about. Because the right advisor doesn't just manage money, they help you make better decisions over time. Now, roughly 1/3 of Americans are getting financial advice from an advisor in some form or another. Depends on the surveys, it varies, but I'll say 1/3. And if you're part of that one third, consider yourself fortunate to have saved or that you're earning enough to warrant the need for financial advice. Yeah, you get a golf clap. Very good. Now, whether you already have an advisor, you're thinking about getting one, or you've got one and you're not quite sure about them, this episode is for you. The decision to get help with your money, well, it's a very personal one. And I think it's a smart one for a lot of us over 50. But choosing the wrong person, that can cost you more than going it alone ever would. Now, look, I want to be clear. There's no right answer on the next what to do, but there is a personal answer that's just for you. I made a rhyme. I'm special. All right, to keep the episode moving, let's discuss the next big question, which is how can a financial advisor help me? Well, they can help in a lot of ways. Investing, well, that's of course, right? Kids' college, 529 plans, retirement timing, retirement planning, IRA or 401k allocations or withdrawals, but also life insurance, pension considerations, when to take your Social Security, taxes, tax structure, debt management, budgeting, divorce or alimony. Plus, there's lifestyle decisions. Hey, how about that new car? Buy or lease it, a new boat, a second home. There's a long list, and having guidance often brings confidence. Now, a common misconception is that advisors are only there to help your portfolio beat the market. Yeah, you got to beat the market. And truthfully, that's not the real value. And in reality, many of them really won't be beating the market. But what a good advisor will do is help you stay disciplined during market volatility, avoid costly mistakes, and structure your finances around your life. They bring perspective and sometimes restraint. Okay, you've decided, heck yeah, I need an advisor. Let's go find one. Woohoo! Well, to do so, you don't need to be an expert, but there are several simple questions we should be asking potential advisors. They include, how do you make decisions during market downturns? How do you think about risk for someone who's in my situation? How do you get paid? What is your investment philosophy? This might entail their use of funds versus individual positions, diversification, passive versus active management, many more. What exact services they provide and at what cost? how much personal access you as a client are going to have to them. And are there additional services that require extra fees? Now, when they respond, remember to not just evaluate their answers, but also evaluate how clearly and concisely they communicate those answers to you. As you begin to interview, either in person, on the phone, or electronically via email or video calls, there's so many ways to do that. There are a few things worth paying attention to as potential advisors respond to your inquiries. And I'm going to call these the 4 beware ofs that I mentioned in the episode's introduction. So, first, beware of overly complex explanations. Personally, I'm a huge fan of simple answers. I think they're just better and usually more honest. Second, beware of promises of consistently high returns on the investment portfolios they manage. There's no way that can be guaranteed. It's very, very suspicious. The third is a pressure for you to act quickly because there's no reason for you to act quickly. Financial advisors should not be market timers. And fourth, a lack of transparency. If your advisor is, hiding something, run away. Run away. Run away as fast as you can. Run away. Okay, and now here's an area where people can easily make a mistake, and that's how advisors get paid. Because if you don't understand this part, you may be getting charged more than you think. Advisors are typically paid in one of three ways. The first is a percentage of assets they manage. It could be flat or hourly fees or commissions on products that they sell to you. Each of these methods has its trade-offs. My bias, and I'd say more or less the industry standard, is the percentage of assets managed approach. The more a portfolio grows, the more an advisor gets paid. So this aligns our goal as a client of growing our personal assets, and with the advisor's goal of getting paid more, which is a little cynical. So let's actually say they have a goal to help you grow your assets as well. But they do get paid more when those assets grow. So in this model, the rate of payment, it may be tiered by assets. So for example, the fee rate may be higher until assets reach a larger tier level, and then the tiered fee schedule will drop. So here's an example of what one might look like. There's a 1% charge on the first $1 million, a 0.75% charge on amounts between $1 million and $3 million under advisement, and a 0.5% charge on amounts above $3 million. So doing quick math based on this sample fee schedule, if you had $250,000 in assets, hey, congratulations. Yeah, let's clap. That's fantastic. Ooh. That would equate to $2,500 a year in fees to your advisor, $250,000 times 1%. If you had $1 million in assets, the annual fee would be $10,000 or $1 million times 1%. But if you had $2 million in assets under advisement, wouldn't that be great? The fee would be $17,500 or $10,000 for the first million, but only $7,500 for the second million. You see, that fee rate drops the more assets you have. Now, no matter the type of fee your chosen advisor may use, the real key is having transparency from top to bottom. It's critical that we, as the client, always understand the amount we're paying, the method of payment, and the exact services we are getting in return for our fee payment. Exact. All righty, it's time to wrap up and tie with a bow. When looking for an advisor, keep in mind it's all about the right fit, because the best advisor for you isn't just one that has the qualifications. They understand you. They get you. They're aligned with you. And that means your goals, your comfort level, your way of thinking. And at all times, and especially after 50, financial decisions aren't just technical, they're very personal. Personal. Choosing a financial advisor isn't about finding someone perfect. Not going to happen. It's about finding someone you trust, someone who charges fair fees for their services, someone who will ask you the right questions and will help you think clearly about the past, the present, and the future. Someone who supports the life that you are trying to build. Now, I'm curious, do you currently have a financial advisor? Please drop a comment below. Because if you do, I'd like to know, wait, when did you get one? How long have you had them? If you don't, tell me what's been holding you back. Okay? Okay. So, coming up next on the Wise Lane, we're going to talk about pets. After 50, do we have them? Should we get them? Is there an upside, a downside? Do we do cats, dogs, ferrets, fennec foxes, capybaras? Look, all I can tell you is there are going to be a lot of cute pictures of animals on our next Wise Lane, like this one. Oh, money, mindset, modern living. This is the Wise Lane. I'm Scott Mullet. Thanks for watching.